Which cryptos are better long-term investments? There are almost 20,000 cryptocurrencies available in the market. Currently, investing in cryptocurrencies over the long term has proven profitable, but it is important that you know about the market before investing. Luckily, investing for the long term can be one of the most simple ways to invest, at least in theory. New investors may find it hard to hold on to their investments after 50% plus moves in either direction. This type of investment in crypto is when you expect its price to increase over time, usually an investment that must be maintained for a minimum of 6 months to 1 year. In some cases, long-term crypto investors plan on holding their investments for decades. Investments can be made in parts, and dollar-cost averaging is a great strategy for many investors. Many long-term investors also earn interest on their digital assets while holding them. If you're holding Bitcoin, Ethereum, or other cryptocurrencies, you might as well earn interest on them to accumulate more coins over the long term. Number 5. Chainlink. Chainlink ranks as the 5th best cryptocurrency to invest in for the long term. Launched in 2014, the Ethereum-based network provides real-time data from off-blockchain to on-blockchain smart contracts via nodes and oracles. Its mission, according to Securities.io, is to create the world's first blockchain oracle network. Oracles are behind some of the most important blockchain technology and are integral to blockchain's expansion. The Chainlink 2.0 upgrade, described in a 2021 white paper, will build off-chain networks on top of oracles to reduce computational strain on the Ethereum mainnet, Benzinga reported. Number 4. Polkadot. With a market cap of over $10 billion, Polkadot has become one of the best long-term cryptocurrencies to buy since its launch in 2020. It's not only a cryptocurrency but also a blockchain network where developers can build innovative, decentralized systems. Polkadot is built to connect various independent blockchains into a single unified network, and even create new chains. The integration allows users to access the network's proof-of-stake validation of security and transactions and makes it easier to transfer digital assets like apps and tokens across blockchains. A recent update facilitates communication and asset transfers between Polkadot parachains, opening the network up to new use cases. Number 3. Cardano. The Cardano network has a smaller footprint, which is appealing to investors for several reasons. It takes less energy to complete a transaction on Cardano than on a larger network like Bitcoin. This means transactions are faster and cheaper. Last year, Cardano launched a hard fork, an upgrade that increased functionality, in this case, enabling smart contract deployment. Cardano also claims to be more adaptable and more secure. It consistently improves its development to stay ahead of hackers. Risks of investing in Cardano. Even with a better network, Cardano may not be able to compete with larger cryptocurrencies. Fewer adopters mean fewer developers. This isn't appealing to most investors who want to see a high adoption rate. The platform has big plans, such as launching an incubator that would help Africa reach its potential as a major economy, but it remains to be seen whether it can live up to that potential. Number 2. Ethereum. Ethereum ranks as the second largest cryptocurrency by market cap. It's both a blockchain platform and a cryptocurrency. The token can be used as a store of value, which is Bitcoin's strength, but Ethereum also has emerged as one of the best platforms for decentralized apps, also referred to as dApps. In fact, it has become a favorite platform for developers because of its support for applications such as smart contracts, which automatically execute a function when specific conditions are met. Ethereum is in the process of an upgrade. Initially called ETH2 and now referred to internally as the merge, the result will be improved scalability, security and sustainability of the network, according to the Ethereum website. Goldman Sachs has taken notice of investor interest in ETH. It plans to offer Ether options trading, just as it allows for Bitcoin. Some analysts believe Ethereum could more than double in value this year. Risks of investing in Ethereum. While the Ethereum platform utilizes blockchain technology, it only has one lane for conducting transactions. This can lead to transactions taking longer to process when the network is overloaded. Transaction fees are also high. The blockchain's gas price, the amount of Ether needed to conduct a transaction on the Ethereum blockchain, rose 13% in March due to high demand for block space, CoinDesk reported. Security has also been an issue. In 2016, for example, a hack that took advantage of a security flaw led to the loss of more than $50 million worth of Ether. However, the merge upgrade is expected to make the blockchain more secure. Number 1. Bitcoin. Bitcoin is the largest cryptocurrency in the world by market cap. You can use it to make purchases online and off, or, if you're like most Bitcoin investors, view it as one of your buy and hold assets in your investment portfolio. It has become more of a safe haven investment than a currency, earning it a place within your long-term cryptocurrency portfolio. Bitcoin got a boost last year when Tesla CEO Elon Musk announced the company had purchased $1.5 billion worth, and later, that it would accept Bitcoin as payment for its cars. Although Musk rescinded shortly after, citing environmental concerns, plenty of other companies, including Microsoft, PayPal, The Home Depot and Rakuten, accept Bitcoin as payment, albeit indirectly in some cases. Other businesses are adding Bitcoin to their investment holdings. And in April, Goldman Sachs made its first cash loan secured by Bitcoin. Bitcoin is a volatile asset as you track it day to day. However, it has been the best performing investment asset for the last 10 years, and a recent network upgrade to add functionality will make the platform more useful and could make the coin more valuable. Risks of investing in Bitcoin. The value of Bitcoin tends to fluctuate a lot. You may see the price go up or down thousands of dollars during any month. That certainly has been true so far this year, as Bitcoin prices have correlated to the Nasdaq, as CNBC reported, challenging previous assumptions that Bitcoin would serve as hedge against inflation. If wild fluctuations like these make you nervous, you may want to avoid Bitcoin. Otherwise, as long as you keep in mind that cryptocurrency could be a smart long-term investment, these fluctuations shouldn't be too concerning, and the current low price could present a good buying opportunity. Thanks for watching this video. Please subscribe my channel.